Bollinger Bands are a type of chart indicator for technical analysis and have become widely used by traders in many markets, including stocks, futures, and currencies. Hello everyone, welcome to ChartRider's last episode in the first season. Today we are going to cover the last indicator we wanted to cover in this season, although we have some great plans for the next seasons to introduce other indicators. In this episode, Bollinger Bands are going to be elaborated for you guys lock, stock and barrel. Created by John Bollinger in the 1980s, the bands offer unique insights into price and volatility. In fact, there are a number of uses of Bollinger Bands, such as determining overbought and oversold levels, as a trend following tool, and for monitoring for breakouts. Similar to Dungeon channels we talked about last session, Bollinger Bands are also famous for their simplicity and accuracy. We don't have much to say about limitations of these two indicators. Like always, let's see how it works. Bollinger Bands combine a simple moving average, SMA, and a measure of price volatility via standard deviation, SD. First of all, the SMA is calculated by summing up a certain number of closing prices and dividing the result by the chosen period. For example, a 20-day SMA adds up the closing prices of the past 20 trading days and divides the total by 20. Measuring how spread out prices are from the average, the standard deviation quantifies volatility of the price series. The standard deviation is usually calculated using the same period as the SMA. And finally, Bollinger Bands are typically constructed by adding and subtracting a certain number of standard deviations from the SMA. This creates an upper and a lower band that envelop the price series, forming a channel that expands and contracts as volatility increases and decreases. You might have thought the similarity of Bollinger Bands and Dungeon channels, about which I should say you are totally right. They are extremely alike in their appearance. We covered the function of indicator here, and its usage, and its definition too, so it's time to move to my screen and check it out on the chart. Alright, now we move to the indicators section and type Bollinger Bands. It's also enough to just write Bollinger. There is a point here that you need to pay attention because you might be choosing another indicator or strategy instead of our famous indicator. You shouldn't choose any of these strategies or other variations of the indicator, but just Bollinger Bands itself. Once I click on it, it's going to be applied on my chart. Bollinger Bands can help traders identify overbought and oversold conditions based on the concept of mean reversion, which suggests that over time, an asset will tend to converge on its average or mean price. When the price is trading near the upper band, it indicates that a stock is overbought and may be due for a price correction. When the price is near the lower band, it suggests that the stock is oversold and may be ripe for a rebound. Using the bands as overbought and oversold indicators relies on the concept of mean reversion of the price. Mean reversion assumes that if the price deviates substantially from the mean or average, it eventually reverts back to the mean price. In range-bound markets, mean reversion strategies can work well as prices travel between the two bands like a bouncing ball. However, Bollinger Bands don't always give accurate buy and sell signals. During a strong trend, for example, the trader runs the risk of placing trades on the wrong side of the move because the indicator can flash overbought or oversold signals too soon. To help remedy this, a trader can look at the overall direction of price and then only take trade signals that align the trader with the trend. For example, if the trend is down, only take short positions when the upper band is tagged. The lower band can still be used as an exit if desired, but a new long position is not open since that would mean going against the trend. On the chart, these understandings would be much more meaningful for you. So let's move to my screen now. Here we are in Litecoin chart in 4 hours time frame. Before applying Bollinger Bands, I have to recognize my trend first. Actually, these yellow lines that you can see here are for price action traders, and the lines that I've drawn here are for price action course as well. but it's also useful for you in order to recognize your trend. The price has formed higher highs and higher lows, proving my bullish trend. So once I come to the indicators and choose Bollinger Bands from my favorite indicators list, and it's applied on the chart, I can find some opportunities that align with my overall trend. For example, let's zoom in a little bit. So every time that the price touches my lower band, it's the perfect point to enter. So I can enter here and come up. Then I can enter at this point and be with the price. It touches the lower band again. It's another opportunity. It's coming up until here. And here is another opportunity. And every time the price touches my lower band, I can get my long positions because my overall trend is bullish. And let's zoom out a little bit. I want to show you another example. Beside this bullish channel, there is another channel that is bearish, and the previous channel has been interrupted and actually it's broken. So here, as you can see, the trend changes to be bearish, so I should take all short positions when the price touches the higher band. So if we zoom in a little bit, we can find lots of positions, lots of actually short positions that we can get use of. Give me a second, please. Yes. Here is one chance. You can see that the price touches the higher band, and we can be with the price until here. And when it touches the higher band, I can get this tiny position here. Then I can get this position and continue to get my profits until here. Let's be realistic. If we go short here, we have to tolerate the price a little bit, and then we can have this huge profit. As John Bollinger acknowledged, tags of the bands are just that, tags, not signals. A tag or touch of the upper Bollinger Band is not a sell signal, and a tag of the lower Bollinger Band is not a buy signal. Price often can and does walk through the bands, and in those markets, traders who continuously try to sell at the top and buy at the bottom are faced with an excruciating series of stop-outs, or even worse, ever-mounting losses as price moves further and further away from the original entry. One of the unknown yet valuable points regarding the usage of Bollinger Bands is to apply two of them on the chart. For instance, you can apply two Bollinger Bands, one of which has a standard deviation 1 and the other has 2. The common covered area is called uncharted territory, in which trading is not recommended and mainly senior traders refuse to open positions there. However, the upper and lower part will be your buying and selling zone. Let's get back to my screen now and see this fabulous trick. I'm in Litecoin chart again, and I have the same Bollinger Bands that we worked on earlier. But I want to add another one, so I come to the settings and I choose it again. The second one is also applied here. So I come to the settings of the first one. I come to the input and I set the standard deviation to 1. I come to the style section again and I hide the basis as I don't need it really. And I want to change the colors to somehow yellow so that it's going to be evident for you. I think that's perfect. And then I come to the settings of the second one and I hide the basis and I make sure that the standard deviation of the second Bollinger Band is 2. I want to choose the upper and lower bands in the same color. I think it's totally clear for you. Informally among traders, this area is called no man's land. This area is the buying zone in which you have the permission from the indicator to go long, and here is the part that you are authorized to go short. Bollinger Bands are one of the famous and highly used indicators that you may see in most of the seniors charts. Like the on-chain channels we talked about in last session, Bollinger Bands are known for their simplicity and practicality. In this episode, we talked about Bollinger Bands, how to apply them on the chart, a few tricks that you may find rarely elsewhere. And today's assignment is to move to the chart and apply this indicator on different assets. Tell us in the comment section whether the buying or selling signals that the indicator gives are authentic or not. Remember, you need to practice these indicators to be master of them. After several hours of training, you can apply 2 bands to check the trick I've mentioned earlier. If you have any questions, please don't hesitate to ask in the comment section, and I apologize for my husky voice as I've got a terrible cold, but my commitment to provide the last section of this free course doesn't allow me to postpone this session for you. Have a nice day and trade bravely.